Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hi everyone, my name is Rob Clayton and thank you very much for joining me. To begin with, the bullish sentiment for the Australian dollar gained further ground last week after clearing the 77.45 level. And as it challenged the top side, we've now got a stab towards 78. And you can see that the market clearly rejected this level as it was close towards the 60-day moving average and also the resistance around 77.90. From the rejection does suggest the market has temporarily failed to the bullish challenge. And if this shooting star is something to go by, then we need a little bit more confirmation. And therefore, if we see a break beneath the previous 2 days closes around 77.56, would give further indication that the market is breaking down and look towards the support level of 77.25. Now, do note that this week we've got the RBA minutes, which is tomorrow, and also we have the China to release its figures also. The resistance on the day, however, still remains around 77.92.05. With all the commotion that's going on in the world, the fact is that the euro and also the dollar index didn't actually move. Now, on Saturday morning, unexpectedly, the geopolitical tension heightened with airstrikes on Syria. Now, it was the US states, Britain, and also France struck Syria in a coordinated airstrike in response to alleged chemical weapons attack believed to be carried out by forces aligned with the government of Syria President Bashar Assad. From a technical point, though, the market is still locked in a 123.05 to 123.65 level, with the broader picture at 122 to 124.5. I do expect to see the market eventually break down, but there is little indication at this stage from the pattern, due to the fact is that we've hardly moved in either direction. But talking of direction, dollar yen, however, is actually posing more of an upside threat. As you can see here, it takes the challenge on towards this level of 107.70. 60 has been the high so far this morning, and the support for this week still remains at 106.55.60. If we get a break above 107.70, this would ignite further towards the upside for the rally of 108.55 to 109.15. Any pullbacks or dips should still remain relatively short-term buy. But the pound is actually moving further to the upside, and as you can see, the uptrend has now risen to 140 figure 20. This week we do have talks on the Brexit, so it'll be interesting to see what comes out of that between the UK and the EU. But furthermore is the fact that we still need to see a break above 142.90. Now, above there would give further scope towards 144.5. Technicals, though, are a little bit flat, so do be careful not to get caught at the top side of the range. Therefore, I do expect to see the market eventually pull back towards the support. Well, with all the geopolitical tension from Syria, gold once again takes a little bit of a step to the upside and now looks towards a resistance that comes in on 1,348 to 54, with the crucial level still remaining at 60.65. I don't expect to see this level break and this roller coaster ride of 1,300 to 1,360.65 to continue. Support on the day is seen at 38. Rounding off with oil, I'm not bullish at these levels, and as you can see, the market since breaking above 66 figure 20 has somewhat stalled. If we maintain above this level though at 66 for a few days, then we could eventually see a rally on towards $72 a barrel. But I'm a little bit skeptical at this stage, and we're only being driven at the moment from the geopolitical tension between the US and Syria, and also with Russia. On the day, I expect to see the range come in around 65.65 to 67.70. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report that will be released shortly.